until other people join in, I'll give a short introduction about myself. I'm Kosha Shah. I work under Chirag Joshi's team, Distribution Marketing. So today I'm going to host this webinar. So before we deep dive into Neev Edition 4, let's just recap what was Neev Edition 1, 2, and 3. So in a short summary, if I say what is Neev Edition 1, it was basically start and say yes. Basically, we just understood the power of saying yes in Neev Edition 1. Then in Edition 2, we understood that how do you mine your existing clients and how do you grow your business through your existing clients. And in Neev Edition 3, our entire focus on how do you delegate and scale. So basically, these were the three short summary. If I want to put it into short summary, this is what Neev Edition 1, 2, and 3 was. So for today's session, due to some reason, Chirag sir couldn't join in, but we have Tushar sir, Tushar Javkar, the head of L&D and products. So he's going to take us through the entire webinar today. So over to you, Tushar sir.
Hello everyone, good evening. I hope I'm audible and visible to all. Great to have you all for this webinar where we are going to discuss the fourth edition of Neev. It still feels like almost a year back around this time itself. Me and Chirag, we were sitting in a meeting room and we were discussing that Kalpen, our CEO, Kalpen Parekh, had given one idea to us. We have got Netra, which talks about markets and facts and figures. Where is the Netra for marketing, for distributors, their playbook? And we started thinking, okay, what can be done? And this was the initiation point from where we started thinking about writing Neev, what all articles should be there. So initially we had thought 5-6 sections of the Neev. We narrowed down to 5 sections, and that is what we are going to discuss today. These 5 sections broadly are going to be, let me just move my screen and open the content page. Marketing Playbook, Storytelling Lab, great ads. Every edition we pick up one great ad from across the globe and we try to learn what can be implemented for our mutual fund distribution business, which would be very, very relevant for us. Master's Wisdom, the piece which I write. And again, we are going to have story of Ravi and Mehta and some learning from the masters across the globe. And then the insights engine, our analytics team, they have given us very good facts and figures. Many a times we talk about business growth, but how much of the business has come from our own input for the business? What all additions I had added over the last 5-6 years, specifically after COVID or 2020 onwards, and what was the help of the market, I would say mark to market, which we generally ignore. We believe we are doing something because of which our overall market share or the AUM is growing, but how much it is because of our efforts and how much it is because of mark to market. We're going to understand that with facts and figures, numbers in the final part of this particular edition of Neev. Let's get started. We will try to take your questions also towards the end, and I believe this is going to be very, very interesting and meaningful for all of us to learn, understand what is there in the Neev this edition, and start implementing right away from today itself. Right? Let's get started. Let's first come to the first part of the Neev edition 4, and it talks about marketing playbook. Many a times, me, Chirag, whenever we are traveling, we ask this question to the distributors and advisors. Okay, if you are the CEO of the company, your business setup, what do you think? What exactly happens to be your growth lever? कहाँ से सबसे ज़्यादा धंधा आ रहा है? Which is the one important factor which is giving you regular business? And many a times, like other businesses also, the answer happens to be referral. A referral is the one of the most important growth lever for my business, and we all agree to that, referrals. And we also ask this question in our presentations and events, like, if referral is the most important growth lever for your business, are you asking referral to all your customers in 2025? Imagine you service around 500 families or 1000 individuals or 1500 individuals in your business. Did you ended up asking referral to all your clientele, all the families which you manage? People say कि we get referrals because we give very good service. We are into service industry, we do not have choice, right? अच्छी सर्विस देना हमारा काम ही है, उसी के वजह से रेफरल आता है. डू यू ऑल एग्री विद दैट? The referrals come just because we offer good service to our existing set of customers. Somebody is happy and that is how he refer me to his friends, family members and what not. So बुरा सर्विस देने का कोई चॉइस नहीं है अपने पास, अपने को अच्छी सर्विस ही देनी पड़ेगी. But are we asking referrals to a referral from each and every customer which I have in my book? The answer is many a times no. We are reaching to maybe 20-30% of our entire clientele, and remaining 60-70% are just getting ignored. That means one of the important growth lever, I am not fully utilizing it, and many a times I am not thinking beyond referral. What if, let's imagine, अगर आज गवर्नमेंट डिक्लेयर कर दे, टुडे गवर्नमेंट डिक्लेयर्स दैट रेफरल is going to stop for all businesses, you cannot refer to somebody else to your existing service provider, then what? Have we thought about that kind of scenario? This is imaginary scenario, but what if this happens one fine day? I'm not trying to get more and more customers or the prospects from the referral engine. Have I thought about what is my second plan of action? What is going to be my plan C for growing my business consistently? And if we haven't asked these tough questions to ourselves, that means we are inviting trouble for ourselves, right? We have to think कि इसके beyond क्या है मेरे पास? What second level of business backup plan I can ready today itself, so that I am not dependent on just one growth channel. And for that, what we have to understand is there's this beautiful book Traction, which becomes very, very relevant. The author in this book suggests that a simple framework: businesses should continuously brainstorm acquisition channels, test a few, and then focus only on 2 to 3 that produce the best results. And but for that, we have to experiment. How many of us are experimenting today? We have to ask this question. Many a times I have seen distributors saying, "Okay, sir, we do flyers marketing by distributing flyers or the leaflets through newspapers or one or two events for corporates or investors awareness program." What beyond that? Am I trying to do it consistently for next 6 months or 1 year and then try to understand what kind of success I had from these three activities and where was the maximum conversion I was getting? I need to test all these different options which are available to me so that I am ready with my plan. If referral completely exhausted, then what other things I can utilize for that next phase of growth for my business? And what we have to understand is from control channel to multiple engines. Today, what we are thinking about is your control channel is referrals. This is in my control. But our objective should be reduce dependency by building at least one more structured channel. So what are these other channels which have worked for top distributors? We try to understand that also. Somebody who is sitting at 3,000 crores of AUM, somebody who is sitting at 5,000 crores of AUM. So what are the growth levers apart from referrals for these top distributors pan India? We keep on traveling, we keep on interacting with most of them, even the smallest distributor, somebody who is just starting his journey, and somebody who is already established. So many a times, rather than just advisors to the distributors, we have started acting like a growth consultant for them, and we try to understand their model, what exactly they are doing, where are the scope for improvement, what is their organization channel. So in a way, while having all these discussions, they open up about their journey, where they started from and what's been working for them. So what we tried to do is, in this particular piece of Neev, we thought of understanding what are the other channels which may work for other distributors also. So it could be content driven leads, which could be through Instagram, YouTube. Today, me, Chirag, and the entire distributor success initiative team, we work for revamping the digital presence of many distributors. So can we do it in a meaningful way, which may give us a regular lead funnel, which helps us getting the prospects in the business? Community members, you can take membership of DNI, and it has worked fantastically for few distributors in few pockets of India. Corporate financial awareness programs. I always think about doing IAPs in societies or somewhere or the other. I have got, let's say, 70% of my clientele is salaried individuals. Why can't I ask them, can I do events in your offices around maybe tax planning or maybe financial awareness or maybe long term investing, goal based planning and whatnot. So it could be financial engagement events and it could be non financial engagement events also. Let's say awareness programs, what are the latest happenings, or many times I have seen many distributors arranging blood donation camps or the health checkup camps for their investors, the other prospects also, the people whom they have referred in their businesses. So we can think around it. Shouldn't always be for my business only or related to my topic only. It could be non-financial engagement also, and apart from that, the regular awareness activity which we keep on doing, flyers, local advertising, that can continue, right? The real question is, which channel the real question is not which channel will work best for me. The real question should be, which channel can I build intentionally. It's internal. What I have to think about is not the best channel, something which I can build intentionally as plan B, plan C for my business. Tanmay, any issues? All fine? Yeah. I hope I'm audible, friends. I'm not toggling between the tabs, and I hope everyone with me. Any questions so far, friends? Give me a quick check before we move ahead. Any questions? Are you all with me? All 820 people in the class. Wow. Everyone, give me a quick check. 820 people in the class. Are you all with me? Raise your hand if you can. Fantastic. Great. Thank you. Thank you all. Thank you all. Let's continue. Let's continue. So I have to think about an alternative to my referral engine channel. Two, plan three should be ready with me. Now, along with that, what I have to understand is how do I structure this entire acquisition plan? Referral, channel two, channel three, and what should be my target? How many monthly leads? What has been my conversion ratio? Monthly conversions, annual acquisition. I need to set targets. Until and unless we are specifying a target from each funnel, we are not going to achieve success or monitor it effectively. Just saying I'm going to create a plan B or plan C, that I'm going to start my content journey, I'm going to post videos on Instagram or posts on LinkedIn, or I'm going to create explanatory videos on YouTube, they are not going to serve the purpose. I have to decide how much leverage I want to take from each channel so that I can quantify it at the end of the quarter, at the end of the month, at the end of the year. This was my target and this is what I could achieve from these initiatives. So we have to understand कि उसका effectiveness भी हमें देखना पड़ेगा, how much effective it was for me in last entire 1 year, right? So this is what we have tried to give you, choosing an acquisition channel to experiment. Let's say events as a growth engine. I have to understand why this channel, because let's say I am comfortable speaking, मैं public speaking में अच्छा हूँ, so I can do this events as a growth engine. I am going to do multiple events this year to experiment. I can hold an audience. मैं audience को पकड़ के रख सकता हूँ. I'm a good orator, I'm good storyteller, so I understand कि whenever I do events, I can hold back my audience. They are not going to drop out, right? I can explain financial concepts clearly with let's say experiences or the stories around that. So what would be my budget? Experimental phase. If I'm earning 100 rupees, I should be ready to deploy maybe 20-30 rupees back in the business for next 5 years of 5 years growth, right? If I'm earning 100 rupees, I'm reinvesting just 2 rupees in the business, it is not going to help us serve the purpose, right? For next 5 years, the exponential growth which everybody has been talking about, what I should be thinking like a businessman or a corporate. If I'm earning 100 rupees, I should experiment and reinvest that money. At least 20-30% should come back to the business for next leg of growth, which should be sustainable, right? What is my target? How many events I am going to do? How many attendees I am planning for each event? What are the channels? Events, public speaking, attribution split, 50% brand building, 50% acquisition. My agenda should be clear कि मैं क्यों कर रहा हूँ ये सारे इवेंट्स करके, मुझे क्या करना है, कि मुझे एक्विजिशन करना है, मुझे ब्रांड इमेज क्रिएट करना है. लेट्स से Tushar Javkar mutual fund distribution business. So I want to create awareness that Tushar Javkar from Dadar is going to do this business. So I want to create awareness amongst the community or the locality कि ये business है यहाँ पे और ये बंदा ये करता है, right? I need to have clear cut agendas, objectives written and tracked for understanding the effectiveness of that particular engine for me, right? So there is no longer let's try events. This is let's build an acquisition engine. We are not trying out. I know what I am doing. I have done my planning. I have done back of the envelope calculations also कि ये मेरा objective है. This is my budget. This is how much I'm going to spend, and I'm good at these points. It's good to understand what are your pros and cons. I'm good in this. I'm not good in this. So I'm focusing on my advantages or strengths rather than weaknesses, right? Then what you can do is you can break down the execution plan, step 1, step 2, define funnel structure as well, source initial opportunities, clients in corporates, as I said, friends in HR, business networks, housing societies, and so on. And from there, what you have to do, measure also. And wherever tweaking is required, along the go, what we have to understand is wherever the things are not working out or there is a scope of improvement, I need to refine those processes also for consistent impact, right? And finally, once we are done with this will help us create that plan B, plan C. I'm not no longer dependent on only just one growth lever for my business. The next phase of growth, next 5 years, I know I have plan B as well as plan C, and at the same time I'm thinking of plan D as well. So if you would have read our earlier editions of Neev, in one of the edition, I believe edition 3 itself, we had written about if you are the CEO of the company, of your practice, you have to free your time from OPEX related activities and think about CAPEX related activity. So this is going to be strategizing CAPEX related activities where I need to spend my maximum time for growth in the business. Let's move on. These are the editions, friends. Each edition of Neev, they are collectibles. They are not like magazines or newspaper कि आज नहीं पढ़ा तो पुराना हो गया, then I have to put it in raddi only. They are collectibles. You can print them, keep the hard copies in your offices, in your home, and do keep referring to earlier editions of Neev wherever you are stuck while doing the business, right? So there could be solution in the Neev which is available in at one place, I would say, rather than information which is scattered and you have to Google it or chat GPT it. It is available in one single handout for your reference. Moving on, the second part of the edition happens to be storytelling lab, and this time it's something which I also do in practice management topics. We have one of the topic which is called as step up as a TED talker. As a distributor, mutual fund distributor, I have to be a good orator or a storyteller, and that is what I say. For each story there has to be three parts. There is one hero, the common story, the Bollywood style, मतलब जो मिर्च मसाला वाला story होती है Hindi movies. There is a hero in the film. Then what happens? There is a problem in the life of the hero, and then there is emotion, drama, action, and finally happy ending. And this is what we have tried to define in this part of storytelling lab for Neev. Okay, how do I structure it? Okay, there is a hero. This entire chart will explain the entire article. Hero is there, his life is going on as is. सुबह उठता है, काम पे जाता है, a common man's life. He gets up in the morning, goes to a job, and gets scolding from the boss, and comes back home late evening. Then one fine day there is a call for adventure, supernatural aid, something is there. Somebody has called for that challenge. He accepts that challenge. Okay, life has been so boring, let me take this as an opportunity. Then there are, initially there would be setbacks, then he is facing challenges. Somebody emerges as helper, he turns into a mentor. There are challenges, temptations, but helper is there, the mentor is there to guide him. Then there is a revelation that I had these powers in me. I could have tackled these scenarios, issues earlier as well, but I never took that opportunity. Then there is a transformation in the hero. He becomes a real hero for the life. I'm not talking about the real heroes like Superman or a Batman, but he transforms himself with the help of the mentors and the helpers. And eventually there is a gift of goddesses also, the return. It becomes famous, and we are reaching towards the happy ending. We have to understand this form of storytelling. Many times, those who have heard me, you would have heard me describing each event of the market in the form of story, whether it is Mehta wala story, which I uses. It is there in this edition of Neev as well. Mehta and Ravi wala story. Each story has got the hero, how he transformed, what challenges he faced, how he transformed or became maybe anti-fragile, I would say, and then there was a happy ending. So that form of story connects well. And I have asked many a times to my distributors and advisors, use this form rather than showing plain data points that markets are volatile. This is what has happened in the history last 25, 30 years. Investors sleep in 5 minutes in many such events. That is what I have observed. And many a times I have observed even the distributors sleep. They may not sleep in 5 minutes, they sleep in 10 minutes. Yeah, everyone starts feeling dozy. What is he talking about? Market data. We all know, right? It's quite boring. So we have to give it a structure. We have to understand the frameworks, the known world, the call for adventure, entering the unknown world. I accept that challenge, right? The mentor is there, the trials and the struggles are there, and then becomes the transformation or return with wisdom. I'm not sure how many of you have seen that old movie of Ajay Devgan, where I believe the name of the movie was Jigar. When I read this article initially, that movie, I had the recall of that movie. Jigar movie, he is a college student, he has a friend, then he is betrayed by one of his friends. Then what happens is he learns the martial arts and whatnot, and finally he accepts those challenges. There are struggles, there are challenges in between, but he overcomes them, and then there is a happy ending. So how do I narrate the stories? It's an art, mind you, it's an art. It can be learned, right? With proper structuring, I can learn this art. A simple investor story. We have given one example here in this edition of Neev. How can I use the story format of hero's journey for investor story? How do I use it effectively for my events? How do I use it in next conversation which I have with my investors, right? So I would request you all, please go through this entire piece of storytelling. And there are frameworks which will work for advisors. And these are tried and tested globally, my dear friends. Mirrors the real investor's journey, acknowledges investors' emotions. So we have tried to break it into how do I construct this story? Why do these stories work? And there has been proven track record. I was just checking the data a couple of days back. I report to my sales head, Usha Nair, and she was about to prepare for board meetings. And I was checking my data last year, how many events I have done. 2025 calendar year. So I saw 234 events I have done pan India, whether it is physical ones or the online one. And out of that, for outer world, like distributors and partners like you, I did around 179 events. 179 events, fantastic responses from the distributors, partners, not only from one pocket of the country, from across, whether it is down south, east, west, or extreme north as well. That means these storytelling formats work wonders when you use it deliberately in your conversations rather than sticking to just plain vanilla facts and figures, right? And how you can use this in client conversation, even for that we have given the framework. Please do use it, friends, in your next conversation. And it should start from today. If today evening, if you're going to meet somebody, try to use one of this learning right from day zero, right? That is what we will appreciate, because ये आपके लिए है. हम चाहते हैं कि आपकी लाइफ बेहतर हो. You should start thinking, how should I inculcate this in my regular practices, right? That brings us to the third section of the edition, which is going to be great ads. But before I start this part, let me ask you a quick question. Are you all with me? Give me a quick check once again. Are you all with me? Are we fine so far? Are you understanding this? Do you think this is meaningful, useful? Great, great. Thank you. Thank you very much. All 900 odd participants, thank you very much. Let me have a sip of water and then we will understand the great ads. Great. Thank you very much, friends. Yeah. In fact, this time the great ad, when Chirag showed me this particular piece, came for great ad, what I'm trying to write, he showed me, we use this marker. I hope it is visible for all. We use these regular markers, right, for highlighting. Even I'm sitting with the edition of Neev, and the important pieces, what we try to do is we try to highlight, so that while delivering the session, I know कि ये वाला part I have to focus on, right? This is my prime focus for the entire article. Similarly, this is one, the highlighter manufacturing brand Stabilo, and when they thought about creating the advertisement about their product, they thought, okay, what we should highlight, what exactly can be conveyed, which is meaningful and effective as well for the readers or their consumers, right? So they picked up something unique. Rather than showing just a marker or a highlighter, how you can highlight, they thought in the history, the personalities which played a crucial role, but they were never in the limelight in that particular moment. Like these images, if you observe on my screen, the person who is highlighted, she is not the real hero in the picture or the image. Somebody else is. Similarly, in this picture, this is from NASA's controlling room, or the third one. Though they try to highlight the personalities, women personalities, those who played a very, very crucial role in the history, and that created the impact. What you have to think about is, while doing advertise creating the advertise or writing the copy, you have to think out of the box and think the minimal words also. In minimal words or limited scope, how do I convey my message effectively? And that is what Stabilo did in through these campaigns, ad campaigns, and that is what we should learn in our practice also. What they tried to do is highlight the remarkable. That was the theme. What they tried to do, by using a bright yellow highlight, the same color as their pen, the campaign literally highlighted the remarkable person in the image. And what they also, the message was very, very simple. Some people are always there in the history, they were just never highlighted. As we can see from the images also, they are there in the images, but they are never highlighted. And we then think, Arey, that person was there in that image, huh? We always ignored because the story or the highlight was captured by somebody else because of the action or what we held or what was his action, right? So they grab that momentum, and that is what we need to do. We have broken down the entire ad. Who is the target audience? What is the core message? What is the emotional trigger we are trying to create here, right? The emotional trigger for Stabilo's ad was recognition and fairness. The women's at the background, they were never highlighted, but they played a very, very crucial role in different aspects of the society or businesses, and that is what they wanted to highlight. Similarly, what we can do is we can use these principles of copywriting, advertisement, and we can use it, implement it for our practices also. I want to ask this question. Can we open the chats for 2 minutes, Kosha? Can you please quickly assign chat rights to everyone? I want to ask this question, and I want all 900 people to respond. How many of us do advertisements around our practices? Forget about, okay, I'm selling multi-asset allocation fund, or I'm selling flexi-cap fund, or I am guiding this. How many of you, how many of you have created ads around your practice? as an unit, as a distributor, mutual fund distributor, what are you offering? How long you have been there in the business? Have you done that? I have opened the chat for all. Can we do that quickly? If yes, type yes. If no, type no. If confused, write confused. What exactly your question, Tushar? Can I have it quickly? I can see few hands going up. Mm, okay. I've kept it. Attendees can chat with everyone. Yeah. Rights are assigned. Can you write it? No. Sushant says no, 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 yes. Few yeses also in between. Somebody said no, the big no. Yes, yes, no, confused. No, no, yes, yes, no, 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 no. Okay. I can see almost 80% no's or 85%. Now somebody has written two paragraph no as well. I can understand, friends. We are sailing in the same boat. When we are experimenting something, it could be confusing. I totally agree with you, and I'm with you on this, right? When we are experimenting something for the first time, it could be completely confusing. I'm not understanding. So take professional help. And this Neev edition, the earlier editions, they are there to help you to understand this, how this can be done the professional way, what others are doing. Once again, I'm changing the host rights, the chat rights to host, so you won't be able to chat now, post your chats. Okay. Thank you everyone. Yeah, appreciate your responses. Once again, going back to the edition and trying to understand this, friends, there are clear frameworks mentioned in this great ad copy which we have written, and try to simplify it for our advisors and distributors. Why these ads work, we have to understand. It turns the product behavior into a cultural idea. Okay, there is not only product promotion, they are trying to highlight somebody who has been always ignored. Recently we celebrated International Women's Day, and this could have been classic, right? They are trying to highlight the women's from the history, what was their role, and they were there in the picture but always ignored. Thoughtful, visual, memorable. So what mutual fund distributors can learn from this: show, don't tell. Show it effectively, visuals or simple demonstrations. Use metaphors people already understand, something which is there. Try to simplify it further. Simplicity travels faster, and that is what we believe. One idea, one visual, one takeaway, that is often enough. And connect product behavior to a bigger idea, something larger than its function, recognition, and importance. Yeah. So that brings us to the end of great ads, and that brings us to in fact my article which I write on a regular basis, master's wisdom. And this one is very, very personal, friends. Let me give you a story before I start. Again, the storytelling format, because it connects the human beings with the emotions. At the beginning of this year, January 2026, I had already applied for this. Last year I was rejected, but this year I got lucky, and I was selected to attend Flame University's behavioral economics program, 4 days residential program at their Pune campus, which is conducted by Sanjay Bakshi, the celebrated professor, Sanjay Bakshi, I should say. And it was a fantastic experience. Again, I'm not trying to promote any program or a course. Don't take me otherwise. But it was a fantastic experience. And many a times we say, okay, as a distributor, as an advisor, that is what we should be doing. We should be talking less about numbers and talking more about how do I control the emotions. And that is what the leaders in our industry have spoken about. In 100 years of history of mutual funds, 1924, it started in America, to today, till today, the 1% successful distributors or advisors, the shift they have brought in is from an economist, they have become psychologist. And this article, this piece talks about that. Many a times I have seen this as a distributor. And again, nothing against it, nothing against you all, friends, but this is what my observation has been. Many a times we ask very tricky questions to fund managers and the CIOs. Okay, what has been your alpha, why your alpha is low, why there is no alpha, why you are tracking this benchmark, why you are copying the benchmark, what extra you are doing to generate the alpha, and what not. Many a times our events, we ask these tricky questions to distributors, because we believe there are two ways to deliver sessions. One, you can talk good about everything and conclude the session on a happy note, or we have to ask these challenging questions if I want to bring that innovation or revolution in the practices, right? I have to talk the truth. A truth could be little bitter, right? But we have to take that bitterness to understand what are the next levers. How do I grow until and unless somebody pinpoints? So many a times I ask this question, okay, sir, these are fantastic questions, but tell me, in last 1 year, which category you have sold the most as of now? Today, recently I've been traveling for our NFOs also. I traveled a lot, and many a times I got the answer, "Ki, sir, we are selling multi-asset allocation fund." Then I asked them, last year same time, January, February, which category you were selling? Then many answers were small cap, mid cap, thematics, flexi caps. Well, sir, if at all, multi-asset allocation as a category should have been sold. It should have been sold last year, right? So that last 1 year experience of the investors would have been fantastic. That means we are flowing with the flow. Even we are having that recency bias. Somebody, some category or some fund which is giving me return, I'm just trying to push through that particular fund or category in the market. That means somewhere there is a flaw in my recommendation engine. There are no processes, there is no flow chart. How do I recommend funds or a category, right? We have to agree to this point, right? Until and unless we agree there has been some challenge, how do I improve? Then I asked them, okay, let's say 2020, for example, and this is something which is written by Nick Murray. Nick Murray, in his book Serious Money, The Art of Marketing Mutual Funds, he says there are 6 important principles to grow your business. Absolutely critical principles, he says. And one of the principle is, when you believe, you will be believed. We have to develop that belief system. His point is simple. When during the conversation, all of a sudden client stops you and asks you, "Sir, ma'am, do you think this fund is right for my son's education planning goal?" He is not asking you about what has been the fund's performance for last 3 years, or what has been the alpha, or where exactly the fund manager has done IIT or IIM. What he's trying to understand is, if you would have been in his shoes, would you invest in the same fund? That is a simple question. So we have to create those belief systems. And Nick Murray also says the constant search for proof in recent performance, star ratings, or rankings is a dead end. Because today, somebody who is at top, he is going to come down to quartile 3 or quartile 4. We have to understand that it moves in cycle. You can read more about it in January edition of Netra, where we have tried to break down few myths about industry. Something which has performed well last year or performing currently, I'm going to recommend that also. Markets doesn't move like that. Investing doesn't work like that. We have to evolve, right? The question which I was talking about, which makes the entire room pause, from 2020 to 2025, let's say from 1 crore, your AUM has now grown to 100 crore. You are 100 crore mutual fund distributor. But what is the split? How much of it has come because of mark to market? And what was your net fresh sales? Do you have the breakup about this? And many a times, 99.99% of the time, nobody has the answer because we are not tracking it. We are happy asking tricky questions to fund managers and the CIOs and the CEOs of the asset management company, but we are not asking these tricky questions or difficult questions to ourselves. Then how are we going to grow? Alpha, macros, policy, fund manager decisions, whatnot. This reveals this real evolution. It is required to grow our business ultimately. And this is something which has been proven by JP Morgan's data also, 2002 to 2021. 20 years, how pro-cyclical behavior is hurting retail investors across like the globe. These are the asset classes returns, 11%, 10%, or whatnot. But what we need to understand is what has been the average investors return in last 20 years. Their CAGR globally has been 3.6%, which is lower than fixed deposit return in India, which is probably lower than savings bank account returns in India, right? And lower than inflation as well. And this is because of behavioral shifts, because of the market's volatility and ups and downs. I need to understand how do I manage this, right? Recent performance, peer conversations, market narratives, headlines, short term volatility. This is leading to this. I don't have biases, somebody says. Ironically, that belief itself can be a bias. Overconfidence, bias. Okay, I do not have any bias. I am biasless. Even that is a bias. Overconfidence bias. मुझे लगता है मुझ में नहीं है, right? The reality is simple. these biases, behavioral patterns, they are present not only in investors but in distributors as well. We are human beings. We tend to commit mistake, right? The first step in this should be, I understand I can commit a mistake. I'm a human being, but what am I doing to improve upon this? Today, this is what is needed. From an economist, we should become a psychologist. Even if I understand numbers less, but I understand human behavior and how to manage it, I could be a successful mutual fund distributor in the industry. That is the truth. And I should take that pain to transform myself from just numbers guy to somebody who understands how to guide the behaviors. And this is something which I do in many of my events. Objections handling, one of the session which I do in practice management. Objections are equivalent to opportunities. Or there is one more classics from our practice management series, which is kitna banega and psychology of investing. And I pull out data. I ask investors, markets are very volatile, and if you watch market every day, this is month on month volatility. If somebody doesn't understand month on month volatility, how is he going to understand day on day volatility? It is impossible. We have to understand that. We have to focus on, as an investor, last 26 years, Nifty 50 benchmark index has given negative return only 5 times. And this data I have taken from Prime Investor. You can Google it, you will also get it. And I have tried to pinpoint what was investors' reaction after every market fall and after every market rally. And I have been in the industry from 2005. I started my career with the trading desk with one of the leading broker in the country in 2005. And I have seen that great bull run phase, mother of bull run, which we talk about 2005, 6, 7. And I have seen how my behavior towards markets volatility or the up moves shaped up in those initial years of my career, right? So after every market fall, investors are panicking. After every rally, investors are frenzy buying, and that story repeats, and repeats. The outcome has been, sometimes we are chasing gold, sometimes we are chasing silver, sometimes we are chasing equity and whatnot. And ironically, at the wrong time. When valuations are expensive, we're trying to buy that asset class. When valuations are cheap, we're trying to exit that asset class. That happens to be the truth. Whether you go 20 years back or you go just 1 year back or 3 months back, the story keeps on repeating. I'm not getting into the specifics of silver, what happened, or recently what is happening with the equity, right? In last 26 years, Nifty has delivered 13% compounded annual growth rate, only 5 negative annual years. That means, as an investor, markets were volatile only 5 times for me. As simple as that. I'm a long-term investor. I'm investing for my retirement goal, which is 20 years away or 18 years away, right? I'm investing for my son's education, which is 16 years away. So I'm not going to watch market every day what is happening, right? Several years, markets have delivered about 20% return, extreme month on month volatility. So how do I deal with this? There are phases. Phase one is fear, then frenzy, then panic, then regret, then rotation. Let's move to gold, let's move to silver. वो वाला asset class करते हैं, वहां पे return दिख रहा है and what not. The real pattern is fear follows declines, frenzy follows rallies, regret follows recovery, and rotation follows underperformance. And that's the behavior gap. Why 26 years return of Nifty has been 13%, the CAGR return, whereas average investor return globally between 2002 to 2021 was hardly 3 to 4%. That is because of behavioral gap. Volatility is temporary, behavioral mistakes are permanent, and they keep on repeating. If you do not understand to manage them, if you don't understand how I can improve this investor's behavior, and which are the common ones: recency bias, fear of missing out, social confirmation bias, loss aversion, overconfidence, herd mentality. And we have seen enough episodes of this. Somebody who has been in the market for last 5-10 years would have experienced this. And generally what happens, friends are buying, neighbors are buying, WhatsApp groups are screaming, news anchors are predicting doom, right? Monkey brain gets activated, and monkey cannot sit at one place, right? Monkey keeps on jumping from one branch to another branch, and that is what we do. We cannot sit quietly at one place. But unlike that, in investing, power of compounding, stillness, that is what Warren Buffett did. He says, I plan to buy companies or businesses which I can hold for lifetime. I don't want to sell them. Stillness, patience, inaction, boredom. Ultimately, that is what gives you result in the long run. Markets reward still investors and they punish hyperactive investors. And time and again, we have seen that. History repeats itself, right? The most expensive habit is switching asset classes, switching themes, switching fund managers, as well as advisors. ये advisor अच्छा काम नहीं कर रहा है. He is not advising me properly. Let me go to somebody who is next door. He is giving good advice to my friends and they have made 2% extra return. Wow. Switching narratives, switching strategies. Yeah, that is what we have seen amongst the investors. What we have to understand, again, a story format, Ravi and Mehta wala story. The last time we spoke about the silver wala story, and that story played out very well. Within a matter of, I believe, 1.5 months, the truth about silver, chasing silver returns played out very well. If you haven't read that story, please go back and refer to that story. Could be useful for your next investor conversation. This time we are talking about Mehta is approaching Ravi and saying that this sector has given 42% return in last 1 year. Let's allocate 1 crore rupees. But look at the frame of Ravi. He's calm, composed. He's trying to understand, has your objectives changed? Has your risk tolerance changed? Has your strategic allocation shifted? Then if the answers to all these three questions is no, then perhaps the only thing that has changed is performance of that sector. Is asking few more probing questions. Are we investing because it fits our plan or because it has done very well? What if it falls 25% next month? Then what you will do? Then Mehta is saying, I will call you and say exit. Then we are not investing, we are reacting. And in investing, reacting could be very, very dangerous. And it can cost us a big chunk of our capital, right? And the story continues. What I have done is, for the benefit of entire distributors community, we have given you here in this article the cheat sheet as well, a framework. How do I manage investors behavior and the biases? I have written a cheat sheet. It can be replicated. Stick it in your office wall. Keep reminding yourself, this is what I have to do. If there is a particular comment or question from the investor, this is what I can use for better framing the current scenario in the market. I'll just scroll down rather than getting into the details of each and every specific. This part is very, very important. And this is what I talk about in practice management, from economist to a psychologist. If I can help investors ignore the noise, from 26 years of data, which we saw from Prime Investor 2 pages back, if I can hide that monthly return volatility, then I'm focusing only on annual return. And this looks fantastic. Last 26 years, just 5 negative annual returns. And that can improve investors' behavior. Wow. In 26 years, markets went negative only 5 times. That's not volatility, that's opportunity. Those were the years when disciplined investors accumulated quality at discounted valuations, building the true margin of safety. And that is what we write in our Nitra editions also. We should search for that margin of safety. कहाँ पे comfort है valuation का, सस्ता मिल रहा है compared to the broader market. And this could be the image which you would like to stick it in your offices everywhere, where the investors can see it conveniently when they come to your office. What's your role? Your role as an advisor is turn a blind eye to everyday market noise for your investors. Remind them, trust the process, trust the advisor. Processes, patience, discipline, trust. My role is to take you towards the goals by ignoring the market noise, the bear phase or the bull phase and whatnot, the short-term volatility or the wars. Everything has happened in the history also. My role is to take you towards this, because time and again history has taught us something, and that is disciplined investor will achieve success over a period of time. And while doing this, I was just doing the research. One fine day, my colleague Ankit came to my desk and he started asking me, why are you searching for that what is it called, in courtroom, that statue is there, statue of Devta, right? Nyay Devta, somebody who is doing justice, the goddess of justice. She is blindfolded with balancer in her hand. And while I was thinking about this article, this is what reminded me. Even for investors, even for distributors, this is what is needed. This is my imagination, friends. I should copyright this. Devi Dhairya Lakshmi, and that is what I thought. If the goddess of justice is blindfolded, she doesn't want to give justice based on the appearance, who is famous or who is saying good things. The goddess of justice tries to gives justice with the help of facts and figures, who is right and who is wrong. Similarly, the goddess of money or the wealth creation, Devi Dhairya Lakshmi, she should be blindfolded. That is what the role of advisor is as well, right? Taking the investor blindfolded towards their goal so that they ignore the volatility or the ups and downs of the market. And if you read through this particular page of the article, this is what I have written. The blindfold signifies emotional neutrality, the ability to remain unaffected by daily market noise. The balance scale contrast panic and hot tips with valuation and processes, reminding us that markets test our emotions more than our intelligence. The clock in her hand, it is depicting the most powerful element in the journey of investing, which is time, the compounding effect. And steps beneath her, they all are about risk management, asset allocation, margin of safety, and long term discipline. They form the true path to prosperity. So I would appreciate if you can take print out of it, do branding in your office with these kind of images, something new, something fresh, and depicting the entire story. And this could be the great ad for you all, right? What's my role as an advisor, as a distributor? This is my role is, and this is how Devi Dhairya Lakshmi looks like, right? Now, here is the cheat sheet, a bias management referral for all my distributor friends. How do I take it forward? There are 5 steps into it. Step 1, diagnose the bias first before responding. Okay, everyone is investing in this, I should also invest. Social confirmation bias. Understand, don't react to the statement of the investor. Diagnose it and diagnose it silently. Try to understand which bias is dominating his decision making or the statements. This sector is unstoppable, recency bias, and so on. Step 2 should be the 3 question interrupt. Has your goal changed? Has your time horizon changed? Has your risk appetite changed? If answer to all questions is no, then decision is emotional, not strategic. Pause. Silence is more powerful rather than giving 10 minutes statements. Okay, you should do this, you should do that. Last time also you did it. Just pause. Let them reflect what mistakes I was committing all these years, right? The 4 question framework after that, before chasing performance, is this part of our original plan? Are we adding because of returns or strategy? What if it corrects by 25% next month? The sector or the asset we are buying, what if it corrects 25%? What would be your reaction? And the fourth one is the most powerful one. What are we selling to fund this? Many investors may say, we don't have to sell anything. I have got 1 crore rupees lying in my bank account. Let's deploy it. But after deploying that 1 crore rupees into this particular hot sector or the hot asset class, are we selling our sleep at the night, peace of life, family time? These are the questions we need to ask. If answers are unclear, let's delay the action. Let's wait for a couple of days. Let's try to understand how this sector is behaving. And then we can reply or come back and unite and take a collective decision whether we should deploy into the sector or asset class or not. Excitement fades, rationality returns when we delay the decision. Step 4 would be reframing toolkit, using the right language. Somebody may say today markets have fallen. Recently, 1 week back, I was in one family event and somebody came up to me and started talking, Hare Tushar, have you seen the markets? We have gone back by 10 years because of this war. Well, hello, what are you talking about? Nifty's all-time peak was 26,300, 400, and we are down to somewhere around 23,500 to 24,000. So please check facts and figures. Don't get colored by the narratives. That is what our responsibility. Markets have fallen. I should say valuations have improved. Portfolio is down. Future expected returns have increased. This is the time to top up. We missed the rally. We avoided buying at stretched valuation. It was a wiser decision. This is risky. This is volatile, not risky. And when it comes to investing through equities, they are going to be volatile. It's part and parcel of our life. Languages shape behavior. We have to understand that. It's part of psychology, right? And the fifth one is pre-commitment reminder at onboarding. Therefore, our onboarding journey has to be very, very strong. And this is what we train. We have got training programs on referral, segmenting, onboarding, how to use chat GPT, artificial intelligence. And one of the important one is onboarding. At onboarding itself, let the investor prospect agree to these points. Okay, what are we going to do in our journey on what are we not going to do? During crisis, remind your client this is exactly what we had agreed. Pre-commitment reduces the panic. Investors also know कि हम ये करने वाले हैं और ये कभी नहीं करेंगे. And these are a few of the ready to use meeting scripts. When client wants to buy after rally, I am not against them. I understand nobody wants to contradict their investors because investors today have got 5 options. Agar aap nahi karoge to somebody else will help him invest in that particular fund. So I don't want to be in that league of always contradicting with my investor. Don't do it. Use this language. I am not against the theme. Let's enter gradually within allocation instead of emotionally. How much allocation we have kept for the category, let's increase gradually. When client wants to exit after a fall, if this was a festive sale, would we exit the store or buy selectively? When client compares with peers, Sharmaji doesn't have your goals, liabilities or time horizons, we have to keep them reminding. Your neighbors, your friends do not have similar goals like you. Your risk profile, your journey is different. And when clients say this time it's different, that sentence has appeared in every cycle. And 99% of the time, it hasn't been true. Yeah. History repeats itself many a times. This is not something which is different, right? And we should keep reminding ourselves we are not here to predict 6 months. We are here to protect asset allocation. We are not here to chase the best performer. We are here to enforce discipline. We are not here to win arguments. We are here to slow the emotional switches and anchor decisions back to the goals, objectives. The advisor mindset should be markets are volatile, investors are emotional. Advisor must be stable. Economist must explain numbers, but psychologist, he manages behavior. Be the psychologist in this game if you want to thrive in next 5 years, because when noise reduces, clarity increases, and when behavior improves, returns follow. Happy advising. And this is what brings us to the end of my particular article and brings us to the final part of the edition, which is insights engine. And this is related or connected to my article itself. Here again, we are trying to understand what has been the breakup of your AUM growth from 2020 January. What has been the breakup of your AUM growth? And we're depicting it by giving you a tale of two distributors, somebody who put in effort to grow his AUM and somebody he never understood the game that mark to market is there, but my contribution has to be bigger. If mark to market gain in my portfolio in my AUM book has been 10%, I should put in 15% because this is my business. I am the CEO, I am the owner, right? So let's understand from the number what top percentile distributors have done differently because of which they could grow. And we have taken into consideration distributors AUM in January 2020, and we try to understand from 2020 January to January 2026 what has been the growth. And in while calculating the growth, what we tried to do is we tried to ignore or remove the effect of market return. So that gives us actually how much effort was put in by advisors for growing their business. तो ये आपका परफॉर्मेंस रिव्यू है. In our corporate life, we have appraisals, annual performance review. This is your performance review. Try to understand these numbers. Top 10 percentile distributors across India, their CAGR in last 6 years, January 2020 to January 2026, excluding mark to market of market, has been more than 24%. That means they have been adding fresh net sales in the business of more than 24% every year. Middle 20 percentile, they have been adding anywhere between 11% to 24% their own contribution towards the business. And the bottom 70 percentile, they have been adding anything lower than 11%. That means their contribution towards the business growth has been lower than market's help. If market is giving you 12%, they have been adding less than 11%. That means somewhere there should be a question mark. What is the importance of my existence for running the business if the business is driven by only markets and not me, right? The IFAs who stayed the course left the rest behind. And what is this? It's all about discipline versus momentum. Now, in this data, what we try to understand is which are the categories which are focused by top 10 percentile distributors. And when we pulled out the data showed these top 10 percentile distributors, they are trying to spread across different asset class, different categories, and the diversified long duration equity categories such as flexi cap, multi-asset allocation as a category, mid caps, and large and mid cap. Whereas the bottom 70 percentile, by contrast, show an extreme concentration in trending schemes. That means they are colored by recency bias. In 2021, dynamic asset allocation or balance advantage as a category absorbed almost 64% of the net sales for bottom 70 percentile distributor. जो 70% distributors है, bottom ones, though they are at the bottom, but the percentage of distributors are very huge. 70% distributors pan India, they are at the bottom category, those who have grown by less than 11% every year. If you observe in 2021, in that year, they sold almost 64% dynamic or balanced advantage as a category. And in 2024, they completely focused on sectoral thematic funds. It was almost 74% of their net sales. Whereas, if we look at this data table from 2021 to 2025, discipline versus momentum. Top 10% distributors in 2024, 2021, 2024, 2025. Middle category 2021, 2024, 2025. And bottom 70% distributors, what they sold in 2021, 24, and 25. If we observe bottom 70%, in 2024 they sold 74% of their net sales was into sectoral and thematic, versus top 10 percentile, those who have managed to grow by more than 24% CAGR in last 6 years, their allocation towards sectoral thematic funds was less than half compared to the bottom category. That means they are taking more religious approach towards understanding the categories, the pockets where there is a concentration risk, and they are trying to avoid that. Unlike the bottom ones, those who are colored by recency bias, they are finding it easy to sell this category because returns proof of work is there. Last 1 year, the performance is there. Therefore, I am selling this. Versus top distributors, they're taking that conscious call by spreading across diversified portfolio, hybrids, multi-asset allocation as a category. And that is the reason why they have been thriving or growing by more than 24% in last 6 years every year, right? If we get into the detail, this particular part of the article, the insights engine, it talks about, okay, what has been the difference. In 2021, balanced advantage funds received 64% of the net inflows. Since then, it dropped to 7% in 2022 and has been negative for last 3 years for bottom percentile distributors. And in 2023, sectoral thematic category received 39% of the cohort's net inflows, and in 2024 it doubled to 74%, and again collapsed to 12% in 2025 because returns were not there. So we are following the recency return performance of the portfolio or the category. That shouldn't be the case. As a long term value creator for my investors, if you want more people to refer you and other channels to work for you, that is what we have discussed in today's session. The quiet compounders have been flexi cap, multi asset, mid cap as a category. And if you understand the number, I have already explained you, do open this report, understand what top 10 percentile distributors have been doing for last 6 years. You will understand the reason for their growth. Top 10 schemes, total net sales 2021 to 2026. For top 10 percentile distributors, look at the spread. Whereas bottom 70 percentile distributors, heavy concentration on sector and themes. Multi-cap 19%. If you look at this side of the table, top 10 percentile, they are spread across multi-cap, multi-asset, large and mid-cap, and so on. So we have to have a spread out approach rather than a concentrated approach. And we have to understand, as we grow bigger and bigger, hybrids could be that category which creates the dependability for me as an advisor, for my investors also, because even when markets are volatile, investors experience would be very good. Couple of days back, I was interacting with one of my relative. I had recommended something to him, and he was cribbing, crying, okay, what, Tushar, whatever you have recommended in last 3 months, it is down 7-8% in my portfolio. I asked him, Arey boss, please do a comparative review of the portfolio. When you are down 7%, Nifty YTD is down more than 10-11%. That means we have done better, right? If broader markets are down by 11-12% and I am down only 7%, you should be celebrating that whatever approach we have taken, it is apt and helping us stay glued in the market even in volatile time. We are not intending to leave the journey in between. If the experience would have been markets are down 10%, but my portfolio is down 20%, then there would have been switching requests, right? I want to switch. I want to change my distributor or advisor as well. So what are the learnings? The learnings are quite simple. Discipline or momentum. Set your own rules. We are giving you the rules also. Not more than 30% in one particular category. That is what we should follow as a rule. Boring categories, compound quietly, flexi cap, multi asset, mid cap. Predominantly, our majority allocation should be around these categories. So we are avoiding the concentration risk. And yeah, that's it. This is the final thought, and more insights, more impact. Yeah, these are the other literatures which we publish on a regular basis. Netra, transcript, converse, report card. They are about the markets. This one is about marketing and practice management. And I believe in last 4 editions of Neev, we have brought that meaningful change in the lives of all our distributors community, because nobody else in the market is doing it, collating it, taking the pain of writing it, putting a thought process why this is helping my distributors or the community, the larger group, for next 5 years of growth or next 6 years of growth.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.